The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour on this 5th day of August. We're looking at a Dow down 600 points at 25,880s. This is going to be very important. Why? Because the 200-period moving average in the daily chart here on the left is at 25,000, let me give you the exact number, 835. MACD is very negative, stochastic is very negative, but at 15% is getting close-ish to some kind of a support level. That's the stochastic. That doesn't mean to say the price has to hold. But look at this weekly chart, peak E. Remember, let me just show you this here for a moment. There we go. The Chapman wave, we look at only 3 patterns, straight up, straight down. That's 1. Arch formation, that's 2. Cup formation, that's 3. You can get the combo where it comes down sharply, bounces, makes the arch, tests the left side low, takes it out. That's why it's red. Could be very negative. We've seen that all day in the short term. Look at the upside. You break out of the green reverse H pattern or Y pattern, and that could be very positive. So just 3 patterns. Let's get to the nitty-gritties of the real thing. There's your arch formation. There's your little H that became a lowercase m and it failed. We didn't even get an H over here. This is just a pure arch formation. Look at the weekly chart. 1 arch, 2nd arch, and now you're testing this. Really important. Let me make this red. That's how important it is. Trend line support kind of coincides with the 200-period daily moving average, and that's going to be right there, 25,843, around about the 28, right here, 25,840s. Now, that makes the resistance at this particular stage right there, 26,430. The best case scenario this week is a bounce towards the 14-period moving average in the weekly. But the MACD, it's only the first couple of hours of the week. I'm going to say at this point, the MACD is crossed negative, where we've got to go all the way through Friday to see where it closes. And the stochastic's still good at 81%, but back into the 78% or lower area. That's not going to be a good sign. And the monthly chart is very good, got repelled at the Chapman wave inside track repellent zone, and it's way down from the high of 27,398. It's at 25,900 at this particular point. So it's sitting on the 9-period exponential moving average in the daily chart. Let's go to the S&P. We'll do this very thoroughly today because it's the beginning of the week. We want to be right there where the action is in real time. The S&P makes a high of 3,027 at a peak D. Remember, I didn't mention, in the Chapman wave methodology, you got A, B, C, D, E, F, G. Those are the letters we deal with. On the way up, we use uppercase, but it's at a peak D. That other things can happen. On the way down, we don't use it the same way, although I do the notation for other reasons. But the notation giving buy signals and sell signals, it's the sell on. It is the way down that we use the technicals and the patterns a lot more. All right. So where are we? We make a peak D in the daily chart at 3,027.98 on the 16th of July, a day after the Dow, and it plummets to the low today of 28.62. That is a whopper of a move. And look, the Chapman wave inside track repellent zone in the weekly chart, 1, 2, 3, 4, 5, 6, 7. 7 weeks in a row, of which 5 weeks it hits that pink resistance level, doesn't take out the green propellant line, because if it goes above that, that's very important and very positive. Instead, it gets repelled, goes way underneath, gaps down this week. It's unusual to see a gap down on a weekly basis. It's a coincidence, actually. That's all it is. But it is a gap down, big space there, making the 29.19 level the very strong resistance. Now, this is underneath intraday and now intra-week. It's underneath this important trend line support right there. that red dashed line. The MACD has crossed negative, but it's only the beginning of the week. We have to wait until Friday afternoon, and the stochastic's good at 83%. And the monthly chart got repelled in that zone. I called it an A. Could have called it an F/A, but for now, I think this is a very good, strong move in the monthly chart. So let's just leave that for the moment. QQQ, NDX 100, down 5.86 at 181.49, down 3%, 3.13%. The Dow is down 2.31%, and the S&P is down 2.4%. There's a big move. Peak D, established last week, way underneath the 14-period moving average. In the weekly chart, MACD has just crossed negative. Stochastic still good at 83%. That monthly chart, I'm still saying it's kind of good. But that daily chart, you've taken out the left side support right there of the 25th of June of 184.65. You're now into the low. You've taken out the low of the week of the 14th, around about 181.94. We're at 181.54 right now. The 200-period moving average is 179. Is that a zero? No, 61. 179.61 is going to be tested sometime this week, I think, from the way it looks. Now we're going to look at the IWM, the Russell 2000, and resistance is, the resistance, the QQQs, would be around about the, I would say, let me just do this again so I can give you an exact figure rather than guessing. Resistance on a short-term basis will be 183.46, somewhere around there. Let's go back to the IWM. IWM is down 2.94%, big percentage. Down 449 at 148.08. Made a peak F, unusual pattern, but it made a peak F at 159.23 on July the 31st. Plummets down. This oval formation might change its pattern, because if there's a takeout of the lows of 145, let's just call it 145. There's a close below 145 on a weekly basis. It becomes an arch formation. Forget about this, what could be a very positive oval pattern. It's already taken out the support. This is tough stuff. Not good. And resistance is now at 150. I'd say 149.80 to 150.35 on a short-term basis. Now, just looking at the very short-term, the 2-minute chart, is there a chance that there could be a rally here? Look, we're testing once. We've broken the low of the day, which was at 2861.50 on the E-mini. We've now gone to 2859.50. But there's a little bit of a difference. The MACD is a little stronger, and the stochastic's just a tad stronger. On-balance volume has finally gone to a lower low, and it's trying to make a W formation at the bottom. And the histogram is suggesting if ever there was going to be an attempt, another attempt today to rally, up until now, this could be the second one. The first one had really nice technicals with 2 doji candles at the low of 10:44 Eastern time this morning and 10:46. We've seen something very similar right now, right this minute, at 28.62.50. This is the next opportunity, because if it can't do that, it takes out 28.55. This could be one of the ugliest days we've seen in a long time. Okay, let's keep going. We're going to look at the TLT. The TLT is the bonds. Bonds skyrocketed. Yes, this is not a Chapman wave plus sign. The plus sign is above the D. It's a gap up doji candle in leg D, but the MACD, the moving average convergence divergence, is good, and the stochastic's weight 94%. I was asked if someone should I get out of all the rest of my T-bonds as I've been getting out slowly, and I said no. It's going to hold quite nicely. Yes, it could pull back to 136, 135, but right now holding very well. I'll be back. Dow's down 590.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
This is and let's go to our first caller. We've got Mike in Ormond Beach. Mike, how are you?
Hey, Basil. I was short a couple of different stocks, and I also had a position in the DXD. And I had a trailing stop on the DXD, and I shouldn't complain. I did pretty good. On Friday, I got my trailing stop. It got me out very close to the high of the day. And anyway, I kind of thought we might get possibly a bounce, some kind of a small bounce this morning, but we didn't. But anyway, my question to you is, do you think we'll get some kind of an oversold bounce and where I could get back into the DXD?
So this is the 2 times short the Dow, right?
Correct.
Yes. So, folks, we are in the DXD for my subscribers. We're in at about the 25.51 area. It hit 28.18 this morning. So this is a tough decision because, yes, you're in it and you made a profit. It's still going higher. The market overall still looks like it's weak. This is what I'm going to say that. Okay, let me deal with it right now as if you got no position. What do? Do I buy this now at 28.09 with a big gap up, a skyrocket move? The technicals are strong. The weeklies actually start to move decently for the first time. And my answer to you is that if you've got a profit in the DXD already, and then you've missed the move from the middle 27s to today's high, and right now it's at 28.08. It doesn't sound like much, folks, but this is 2 times long, 200% short the Dow or the diamonds. Mm-hmm. That makes a big difference because the risk means that even if there's a bit of a look, you're down in the Dow, let me just double check, 575. If the Dow has just a bounce. Even this morning, it had a bounce of about 100 and something points off the low. But if it bounces, it could be a big point move, even though it might not change the overall perspective. So the only way I can think of this is just because of the risk reward, I would go into this now at 28.10 in a very small position, only to say, you know what, on a day like this, if the market starts to close the 3 o'clock hour near the lows, we could have a horrible acceleration into the close. My gut feeling is that the real price is probably either towards the low of the day, 27.66, perhaps 27.80, or maybe even just right in between, like 27.58. That would be where I think the next risk reward phase would be. And I do think that there will be at least an attempt to get to a leg D in this particular move based on the weekly charts. That's the only reason why I'm saying I would probably just nibble at a little bit. But in terms, if you are, do you have your stock short positions now? Is that correct?
No. What happened? Okay, what I got short a couple of stocks, AMD and Disney, a couple days ago, and I got the DXD about close to the same price you did, around 25.53, I think it was.
Great.
And anyway, Friday. I work during the day, so I can't watch it. So anyway, I had a trailing stop in the DXD, and we went up to the high we had Friday, and then when the DXD, when the market started bouncing back up a little bit,
Correct,
on Friday, and the DXD came back down, it hit my trailing stop and got me out. And like I said, I did okay with that. It was a good trade for a couple days. And, I thought about possibly getting back in Friday, but I've gotten burnt in the past so many times where I get in on a Friday, and then a tweet comes out or some kind of announcement, and
anything can
flips
happen.
the
Right.
market, and then I'm at a loss. So I figured I'd wait till Monday, but, like I said, I work. I can't really watch.
So instead of pulling back, giving you an opportunity to get back in, now it's actually close to the high of the day. This is really tough. Now, this is because you had a trading stop, it's telling me that you are trying to manage your risk. If you're trying to manage your risk and you're doing it very judiciously, you did it exactly the way it should be done, because we did not know whether it be some kind of a bounce towards the end of the day. I'm going to say have a little patience. Yes, I understand you could miss out, but you're doing this steadily and you're trying to do it over a period of time. It's not like 2 days are going to make a difference to your retirement. You want really to be able to garner and develop a process that allows you to constantly make some money, and sometimes a little more and sometimes a little less, rather than putting yourself at risk to give back gains that you worked very hard for. So I'm going to say, at the risk of missing out, I'd rather have you stepping aside this move, because it is, you can see just intraday, and you're right about tweets and all sorts of things like that. I suspect that a market that starts to stay down over 480 points, 550 points at 3 o'clock, I'm not sure there's going to be any incentive to actually suddenly put in buys to close at the high of the day. That's the risk that you face. So that's why I'm saying maybe what you could do is just a very small position.
Okay.
So that it doesn't make too much difference if it actually pulls back too much, and it doesn't make too much difference even if it closes at 28.09, it closes even at 29. But it's the mental process that I think is really important that you're participating in. So I'm going to say to you, it's at 28.09. I would do this. I'd go for in the middle of the gap, 27.92, somewhere around there. If intraday you can get it before 3 o'clock at 27.92, 27.90, maybe you could just nibble on it a little bit. But I just have to tell you this, that if there is a rally going into around about 3 o'clock, I don't think they're going to turn around and close it at the lows of the day. They might just close it nicely off the low, but not great at all. So then you'll be in. Then you've got a risk tomorrow. If it closes down badly, there's a good chance of a gap down. If it closes like I said in the newsletter, if it closes at 3 o'clock, if it's minus 180 or better rather than minus 180 or worse, minus 180 is a huge comeback, and that means you could rally into Tuesday. You know what? You've done well there are going to be plenty more opportunities. I'm just talking risk reward. That's all. And I think maybe
Right.
the safest
That's
thing
why I'm
is
hesitant about just jumping right in and chasing it. And another thing too, Basil, I glanced. I believe on my daily chart, I thought I saw on my chart that the Dow was very close to the 200 period
correct.
SMA.
Yes, it is.
If I'm not mistaken. And
Which
I
is
know, I keep the SMA 250 SMA and EMA on my charts because I know a lot of money managers use the SMA. So I
They
like
use
to
the
see
simple
where
moving
they're
average, correct.
thinking. Okay.
And that's why I think we've had a lot of success using the EMA, because most people don't use the exponential moving average. I find it a fabulous. You want to hold on a second?
Sure,
Or you
yeah.
got to go? Okay. We'll be back with Mike. This is a very important context, exactly what I want you to talk about today, the moving average, the support, etc. The Dow's down 600. We'll be back with Mike because this is a very important moment in the market.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Mike, the Dow's down 637. As we're speaking, Mike, it just hit the 200-period EMA in the daily chart. And I had a question in the den from Z who wanted to know about support levels. You can see here in my chart that I've got on the Dow, this is the daily, the one I'm circling right now. There's no support level at all that you can see, right? You got a lot of resistance. That's why one of the reasons with the Chapman wave methodology, as well as the Chapman wave automated resistance levels, we felt comfortable about going short right at the top, 7 points from the top. But look, 25,805 is the 10-minute support, and we've already gone to 25,845. So yeah, you are. 25,860 was taken down. 25,805 is next on the 10-minute. When you get to the 120-minute, 25,631, and then there's pretty much nothing below that. So it makes me very concerned. So I think that was just in terms of the risk reward. That's the reason why maybe I'd said, you could nibble on it. But at this point, really close to the 200 period moving average, you need to see sometime in the next 3-4 hours some kind of reversal to the upside. Otherwise, it could close really poorly. But this is exactly where you've got the risk reward saying, you know what, a breakdown says you could go quite a lot lower, but at the same time, running off this point could be good. And therefore, I'm just saying to you, you've got your profit. We'll get another chance at doing something here. That is for those people who are out. But in the meantime, it's a shame that your stop was it, obviously, because you would have made a lot more money today. But I'm just saying, risk reward. This is a tough one right now. So yeah. I'm just saying, you'll have another chance. Let's rather play with better risk reward chances, even though the money could be made. I mean, if we break down from here, holding short into the close would be fantastic. But this is exactly where you're going to see. This is make or break on the day. It's very important to hold.
Okay. Well, I want to thank you for throughout the years teaching us the importance of the different moving averages, and I've seen many stocks that certain stocks I've found have certain personalities, and certain stocks like a certain moving average, because I guess it depends on who's trading it. But there, some people, some stocks, they react to a 20 period, either SMA or EMA that acts as great support.
Right.
And others, it might be a 50, or I know how important the 9 EMA is too. I have that on my chart also. So I want to thank you again for all the great things you teach us, Basil.
My pleasure. I really enjoy it. That's why I'm here, because I just love this stuff. So thank you so much, Mike. I appreciate that. Good luck on the next trade. We'll look forward to that.
Thank you.
Thank you for calling. So, folks, I had a bunch of questions. I just want to go to one that was an email earlier, and I said I would respond very quickly. The GBTC, this is the Grayscale Bitcoin Trust ETF. ETC, a BTC, ETC, I don't know what it's called, what a BTC is called, trading right now at 15.05. I discussed this in terms of the rectangle formation. Most of the time, you don't pop out of rectangles very quick, for long. You go above, then you come back into the rectangle, or below, until you really make a huge move away from it. Gold has just done that. So this is what I'm looking at. There's resistance now at 16.06, trend line resistance. The next one is at 1667. You go above that, you'll be testing the 17.40. Now, what's important is looking at gold. Gold and Bitcoin are the areas that some people are going to now as a counterpoint to what's going on in the general market. So treat it as in play. Now, I just wanted to show you that with the GBTC, I'd say that this is a basing area. The move on Thursday said it was a warning, but I was so busy I completely forgot about it on Friday. I'm not sure I would have done anything, but Friday I had this as a rectangle, smaller rectangle formation, because I like to define them in terms of periods, and this was the shorter period, and you can see Friday popped above. Today it's up again, but now it's kind of red. It's pulling back, but the technicals have improved. So I said about a week ago, I said, no, don't forget about GBTC, because now it is in play, and being in play means that it is, what happened over there? It means that it can keep rallying, and that it's trying to find some base of support, and that's going to be very important. So I am not sure what's happening today with the internet. Maybe it's my internet, but I hope everything's going okay and can hear me. So this is very important. So the GBTC is in play. I would say for anyone who's not in it, I'd probably say have a little patience. Yes, it could go back to the top and getting in at $14.99. You could do that, right? Would I buy it at $14.99? Well, the MACD's improved and the stochastic is improving. So I'd say if you're used to this particular vehicle, because it trades overnight, so don't touch it. If you've never had it before, don't touch it if you can't do any trading overnight, anything. You got to be prepared. This Bitcoin trades overnight, but this thing stops dead at 4 o'clock or just about 4 o'clock, and then starts up again at 9:30 in the morning. So you just kind of stuck. So what I wanted to say is that if you, I think the question was, would you add to it? And my answer is, if you have already made some money in it, I'm going to say yes at $14.99 because it's in play. Let me just look at this 120-minute chart. Peak A, B, C. That is, yep, that's D and that's E. I think it's in for a little bit of a rest. I'm not sure I can say altogether that gold and GBTC is in for a little bit of a rest. Let me just do the gold because they have moved together, so I'll treat them together. Yes, gold is saying it's had a fabulous move. Might have a little bit of a breather here, but it's in play as well. No, I'm going to put them together, and I'm going to say, if you haven't been in it before, I'd say be careful. Rather look at it at between 14.20 and 13.90, and then we'll call me or email me, and we'll look at it together. But if you have been in it and you want to add to your position, right here at 14 in the 14.97 area, yeah, it's probably going to test 14.80 and then have a rally. But this is kind of where you could add. But this one, I would have a very tight stop. I'd have maybe a 25-cent stop. Make it real 2% something. I wouldn't have a big position. I wouldn't have a big stop. I'd treat it as something that has to work right away. You want to see by the end of the day, it's not at 14.88. It's rather at 15.03. That says you're in play, and that maybe tomorrow you'll even gap up. So I hope that helps you with GBTC. Next question I had was, whoa, where did it go? Oh, the EMA. Why do I use the EMA? Let me just go. Let me go to this particular. Should I do this one here? No, let me go here. So let me go to the SPY, because that most probably doesn't have as much notation as the others. So you see this 9-period moving average. This is an exponential moving average, the green line in the daily. And look at the black line here. This is the 14-period exponential moving average. I love those because look at the way, look at the 14, look at the way the price hugs that line. It stopped dead on the line. It ran up, used the green line, and then right here where it deflected, and now I'm going to go to this particular one right here. No, I keep going there. Get rid of this, man. Move it over. I will talk about that. That's the HD, Home Depot, and the SPY. I'll talk about that. Here we go. Is that a break? Yeah, that's a break. Just wanted to show you. Look how beautiful it held the support in the SPY in the daily chart. Look at that black line, the 14-period moving average. Look what happens when it broke down. And that became, look at that resistance. It couldn't even close above it. I'll be back. We'll talk more about it. Basil Chapman, Tiger Technicians out. Dow's down 650. Wow, ugly day.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago, with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African Rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the gold report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your gold report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. I had a question about the support level of the E-mini 10-minute S&P right here at 28.59. Look what happened, how beautiful the support levels held, Chapman Wave automated support levels held, and the resistance came in earlier on. But once it broke 28.80, it just went straight down, and that was like a 1-minute breather at 28.68. Just it hardly held. Then it went a little lower, it went a little above, hit the 14-period moving average, exponential moving average, and then plummeted under the 9 again. And right here, 28.55, this is key support. Can it hold? That's the big question on the 10-minute chart. So I have to tell you, there are a lot of people looking at this market and saying, wow, I've had no chance to even get out. It happened so suddenly. I've got to start lightening up. We've had a fantastic year. I don't want to see it given back just in a couple of days. What do I do? What do I do? I better take something off. And that's kind of the reason why it just went underneath the 200-period moving average. So just be careful. So let me show you something. I'll just grab, it doesn't matter what I grab. Look, the 200-period exponential moving average. Here's the EMA. Let me go to the SPY because that goes back further. So here's the SPY. Look how important this is. Let me go to, I'm going to insert indicator, just grab it. Go to trade stations, tools, show me indicator, stochastic. I'm going to go to stochastic right here. No, I'm going to go to moving average. There, that's even better. Moving averages, and I'm going to go to moving average one line. Here we go. What color should I make it? Just so that we can see it, I'll make it red. Nice bright red. And I'll make it nice and thick so we can see apples to apples. Here we go. This is the input is 200 period moving average. Here we go. And you can see, oh, it hit it exactly. It did even better than my 200-period exponential moving average. So the low in December was at exactly the simple moving average. Bam, 233.76, and it hit it just exactly. It went underneath my 200-period exponential moving average. Very nice. That's a good example, and that's an example. Now let's see what happened here. And the reason why I love this so much is, look what happened back in 2016. Stop right there. A double hit. Twice it hit the 200-period moving average exactly. All right? So that's what I wanted to show. Now let's go to red, and we're going to change it. I'll make it nice and thick, and I'll make it, what let's make it what I use all the time. Let's make it a 14 EMA, and you'll see that a 14 period, just a 14 period of this simple moving average. Here we go, 14 period, and you can see the green line. If I can expand this, I'll show you just the reason why is just years of experience of using this. This is the red one, right? This is the 9. How can that be? God. This is the 14 period moving average. Right. So the 14 period moving average is in red, and mine is the black one. How come they say, yeah, there we are. So the black one. So you can see the black right here. Look how it held all those support levels back in February, March, April, May, June of 2015. So that's what I like. I call it walking the 9 period or walking the 14 period moving average. The red one was good, but look at the way it held the black ones perfectly. So then it became resistance, and then you can see that they actually have a different momentum. Look at the way the red crossed the black right here. That's very unusual, and that was back in October of 2015. And my black line kept holding as really good support and then resistance, while the red was way far away. So all I'm saying to you is you can use anything you want. I just find that based on the work that I've done over not the years, not the hundreds of charts, but the tens of thousands of charts, look at this. Look at the way the 9 period moving average held so beautifully all the way through. I just like that. So for me, that's the one I use when it coincides with a 9 simple moving or a 14 simple. That's fine, but I found that it works just really well for me. And even here, look, the weekly chart hasn't crossed negative yet, so I'm using these and I'm feeling very comfortable about it. Now the MACD uses exponential moving averages. It has just crossed negative, but this is just the first day of the week, so I have to wait all the way to Friday to see where it closes. I hope that answers you, and it doesn't answer you in a mathematical way. It answers you in the way that I've used it for so long. I love the exponential moving averages, but I mix them up. I do every once. I think my 50 period moving average, if I can find the thing, I got it in the daily. Let me show you something here. Yeah, is that, let me just see. I think I mixed this up. No, there's an exponential as well. All right, this is exponential. Every once in a while, I'll use the simple just because someone asked me about it. I put it in to try it out. Look at this, the way the 50 period moved. It held it on Thursday, broke it on Friday in the SPY, bam. Look where it happens. And the 200 period moving average is at 283.63 in the SPY. It's trading now at 284.87. All right, a couple of questions have come in. They wanted me just to go through my usual thing. Look, the IYT, transports down 5.84 at 180.90. Broken below very important low of June the 25th of 181.37. I don't like that. And that weekly chart says, oh, you've broken that support. You're into this ugly bar, this very good bar of the low of June the 3rd, where we went long at the very low. I said to subscribers, we are getting out of our long position. And if our stops are hit on any of our remaining very small positions on the long side of stocks or whatever, we're going to get out of that. This is a little more serious, and I have to treat it that way. I'm still looking out for higher prices, but this is a very important moment. So that's the IYT. XAL. XAL is with crude oil down. XAL couldn't care. Peak D in the Chapman Wave weekly chart. Only a peak C in the daily chart. Only a peak C in the weekly, but it's a retracement one, and it's breaking right now the key support in the transports. So in the airline index, the ARCA index, down 4.28 to 97.31. This is really ugly stuff. Any rally is going to have to be based on some kind of optimism, some tweet, something that really is good. You know, you got China now having a real problem, especially with Hong Kong. So China's trading right now. The FXI is trading huge gap down from the 39s to the 32 level, minus 154 at 38.32. That monthly chart says there's a lowercase h pattern. Remember the one that I showed you right here? The lowercase h right here. You take out that left side low, that could be very serious. And Hong Kong, this is the first time I remember trading during the period when Hong Kong was going to be independent. And wow, it was like Y2K back in 2000. Everyone was so nervous, and then everything turned out to be pretty good. This is the first time I can recall that Hong Kong is under internal pressure that is politically and will be economically based as a separate unit of China. And it's for, I have no opinion, I have no philosophical, this is not my business. I've looked at it, I do have an internal opinion, but at the same time, I'm not there. I don't really know what's going on. I do know that the conflagration that's going on now is extended from just people talking politically to now you've got party factions. That makes it much more difficult to control. So this is a period. Trump hasn't got one thing to worry about. He's got 5 or 6, and I always say presidents can worry about 1 or 2 things, but when it gets greater than that, there's a lot, too much going on. I'll be right back. Dow's down 710. I'll be right back.
That we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. So just to be clear, so we're out of almost all, not every, but just about all our long positions, taking nice profits. I've given one a little bit of a loss chance that maybe we can just a nibble in it to see how it would work. If that gets taken out, that's fine. But that's one that we're going to be looking at longer term. This is a really important moment. Let me just go through this quickly. You see the FXI, China large caps, not good at all. Let me just run this. XLF, the financials, quite a move down today, down 0.83 at 26.77. This is part of what we're looking at. That's why I think gold is moving higher at a peak F in the daily of the XLF, the S&P financials. This is really important. It's saying people are really fearful now because if the banks start to be involved, we can look at gold going quite a bit higher because that's kind of the safety fear trade. So that watch this closely. It's broken the 200-period exponential moving average. The next real support is in the 26 area, 26.30 to 26. Wow, it could get there quickly if today's even uglier than we're looking at right now. The reason why we're staying short, we've got quite a heavy short position now in the Dow, working very nicely, is because that top that was made at that peak D is really important for us. Everything about it said, because of it, the pattern that I had looked at and I showed over the weekend, I showed something very important, is that this weekly chart is really important, this peak E with the doji, silent doji of the second day after the top. This is really important with hitting this trend line. Let's watch this very closely. The other thing I was looking at is just real quick, like wheat. Wheat is trying to find a support, even though the dollar's down. We've been long the dollar all the way since April, still long the dollar, but this could be a period where the administration actually is able to push the dollar down a little bit. That's the reason why the euro is rallying. Very important week, a very important session. And 3 weeks ago, I said that was one of the most important weeks. I think it was 2 weeks ago. That's when we went short the Dow. And since then, it's been quite. Look at this. The euro is just about to try to break key resistance. Very important session. Very important week coming up. Please be careful. Put in some stops. I've been saying raise a little cash. Get some cash. You'll be able to put it to use at some point soon. But don't be in a hurry. I'll be back tomorrow. Have a great day. Stay tuned for Steve. You've got Dave. You've got, I think, Larry sitting in for Tom this afternoon. Have a great day. See you tomorrow.